Welcome to our Forex education program. Now the last step for trend recognition, and this is a very important step, retracements. Take a look at this example. We're going to try to get as detailed as possible. Here we have the start of the US session. Once again, Aussie USD 5-minute chart. You can see that the price started moving higher to approximately 104.45 from 104.25. The price started moving down. 1 hour later, as you can see, 9:30 in the morning, the price reached a low of 103.85. So here we have the price moving lower, far away from the start of the session of 104.25, all the way down to 103.85. That's approximately 40 pips. And the time has passed from 7 a.m. to 9:30, which is 2.5 hours. And here we want to focus on the right hand side, how the price starts to retrace from 103.85 all the way up to 104.05. That's approximately 20 pips from the lowest level. Now this is the key factor. We always look for a retracement, something significant. As the price moves lower, as you can see here, the price was moving down, and because each candle represents 5 minutes of information, you can't really see that in between the price moved down, moved up 2-3 pips, came back down, made a newer low, moved up 5-3 pips, and then kept making new lows as it retraced from here to here, another 4 or 5 pips to continuously come lower and lower. What we're trying to give you an example of is that in between each candle, the price did retrace, making new lows, but the retracements were very small. 3, 5 pips, 6 pips, maybe even 10 pips. When we're looking for a retracement and to confirm the direction of the market, we need something significant, such as we see here. This retracement from the price of 103.85, the price retraced to 104.05 of 20 pips. As a trader, as someone that's looking to evaluate, to determine the direction of the market, I'm looking for this price to eventually come back down and break this lower level to truly start thinking that this trend is going to continue for the rest of the session, whether it be for the next 2 hours, 3 hours, or all the way up until 5 p.m. this afternoon. But the key mark at this point is to have the price come back down after a significant retracement of 104.05 all the way down to 103.85 and make a newer low. Now let's take a look to see what happened after. You can see that the price did come back down and broke the 103.85 to 103.80. Now why is this important? Why is a retracement important when we're trying to determine the direction of the market? You see, when the price is starting to retrace, such as 15, 20 pips, especially at the beginning of the session, that is a huge retracement since the price only moved down 40 pips. Here we have just seen the price retrace 50% of the price movement in the first 2 hours. So you don't know if this trend is going to break and move lower, or if this could possibly be the change in direction and the price is going to start moving higher. So by the price moving up significantly and coming back down gives you a better confirmation of the trend truly being down instead of possibly seeing a change in direction. Here once again we have another retracement from 103.80. Because it's the second retracement, and significant one at that, of 20 pips, you can see that the retracement didn't go up as high as 104.05, but it did go to 104.00, pretty close, and it's of 20 pips. Here we could possibly sell the Aussie USD, hoping that the price eventually going to make a newer low than 103.80. Now let's take a look at what happened. Here you can see for the rest of the day the price did move lower, giving you an opportunity to get out of this trade with a profit. And on the lower part of the screen you can see we had another retracement of over 20 pips, and eventually the price did come back down, breaking the lower level, giving you another opportunity. Now we're going to go over entry points in a different video. The important part about this video is to understand how retracements give you clues to the direction of the market. And whenever we have the price movement, it's always going to move in waves. The key is for it to consistently make newer lows if the price is moving lower, or newer highs if the price is moving higher. In this example, we can see that the first retracement didn't happen until approximately, I know you don't see the time here, but about 10 o'clock in the morning, New York time, is when we saw this nice retracement. And many might have thought that the price was going to change and started placing buy orders. But instead, you can clearly see how the price came down, made a newer low, giving you more of a confirmation that this trend during the US session was moving lower. And you can see for the rest of the day, the price did continue and ended up down for this session. Now, this is not always the case, but this retracement gives you an idea on how to confirm the direction of the market during the session that you're trading. Now, before we end this topic, we're going to give you one last example on how to identify the trend in the market. And that's by viewing different currency pairs and understanding the correlation between different pairs and the pair that you might be trading. Allow me to give you an example. In this example, we have 4 different charts. On the left-hand side, we have the Euro USD. We have the British pound versus the US dollar. We have the AUD versus the US dollar, and we have the USD versus the dollar CAD. Now we want you to focus on the right-hand side of each chart. You see the US session to the right. You can see we've drawn a little arrow, and take a look at the price movement. How the price of the euro moved down, then it ended up higher for the rest of the session. Take a look at the GBP. It also moved lower from this yellow line to end up higher at the end of the session. Let's take a look at the Aussie. The Aussie doesn't have the drop at the beginning of the session, but it did end up higher, same as the euro and the GBP. And at the dollar CAD, because the dollar's first and the dollar CAD is second, you can see that it moved lower for the rest of the day, confirming that every single one of these pairs was moving in the same direction. The interpretation, very simple, that the US dollar was losing strength versus the euro, versus the pound, versus the Aussie, and you can see here on the dollar CAD, the US dollar was weaker as well. This is what we mean by understanding the correlation between different currency pairs. Even though you might love to trade the Euro USD, and that's the only chart you care about, it's very important that you confirm the direction of the market by viewing different currency pairs, since they do have a correlation and move in the same direction most of the time. Not always, but it's a good reference point that if you see the Euro USD moving up on a 5, 10, or a 15-minute chart, to confirm to see if the British pound is also doing the same thing, as well as the AUD USD and the US dollar CAD. If you're looking to place a buy order because you see the euro moving higher and the British pound and the rest of the pairs are moving in the same direction, doesn't that give you more confidence to place that trade, knowing that the rest of the world is moving in the same direction? Of course it does. And that's the reason why we mentioned to all of our clients that even though you might like using one currency pair to trade, always view different pairs to get an idea of the trend and to make sure the trend is consistent. Now, before we let you go, take a look at this next example. Here we have the price of oil, gold, the Dow Jones, and the German index. Not only do currency pairs trade in the same direction at times, and there's a correlation amongst them, but also, as you saw the Euro USD moving higher, you see oil moving in the same direction. Gold was also moving in the same direction, as well as the Dow Jones. and the German index. Now this can change from time to time or depending on the economic status from different countries. But for now, when we see the price of oil moving higher, we tend to see the price of the Euro USD moving up as well. When we see gold moving higher, we see the Euro USD moving higher. When we see the Dow Jones moving higher, and there's a very close relationship between the Dow Jones and the Euro USD. So when we see the Dow Jones moving higher, 8 out of 10 times, you see Euro USD also moving in the same direction. So if you have the opportunity to view 8 different charts, these are the charts that we would be focused on. Oil, the Dow Jones, the German index, as well as Euro USD, GBP, AUD, and the dollar CAD. With this, we'll end the topic on how to identify the direction of the market. Now remember, it's very important, even if you're using different time frames for one chart, use the same time frame on the other charts to compare or to make comparisons when you're trading intraday. Now we hope you enjoyed the video, and we wish you the best of luck when you're trading in the foreign exchange. Good luck trading.